You guys are watching this video right now all around the world. You're alive and blessed. Can't even complain. Welcome to Misunderstood, an MYB trading course. In today's session, we're going to talk about three trading strategy that every trader should at least know. Supply and demand. What is supply and demand? How to identify supply and demand, and how to trade supply and demand. Secondly, we're going to talk about order blocks. What is an order block? How to identify an order block, and how to trade an order block. Thirdly, we're going to go over liquidity. What is liquidity? Where to find liquidity? How to not be a liquidity. So with that being said, let's start right into it. So the first one we're going to talk about is what is a supply and demand zone. A supply zone are any areas where selling pressure is high, leading to a price declining. A demand zone has an area where buying pressure is high, leading to price to increase. All of these zone, guys, is where institutional traders on large market are waiting to enter the trade. So for example, before to identify your supply and demand zone, you look for the trend, where the trend is starting. So we're gonna go and get our rectangular. This is my favorite one right here, the rectangle. All of my trades I draw with the rectangle. So we got the demand zone right here. We draw the demand zone. Always try to get it. Let me bring it in the full screen for you guys. So this can be the demand zone right here. Then we can have the resistance coming up now, or the support. We're gonna put it there. There we go. So now we already identified these two. Let's bring it down. Let's bring it in neatly. There we go. We want to put one right there. And we want to put the next one right over top here, just in case. You just never know. That's the fun thing about it. I can do all of this, and just like that, you can just do the opposite, because it's in the stock market, it's just 50-50. You just never know. So, supply zone, demand zone, demand zone, demand zone. If price by any chance break past the demand zone, the supply zone now become the demand zone, and price will always go. There's a demand zone, price went up, hit the supply zone, it's gonna, for example, look at the demand zone as the ground, and you bounce a tennis ball, you hit the roof, the ceiling, it came back down, up and down. So how you trade it now, all you have to do now is get your, let's say you want to go for a short. So ceiling right here, but also if price break through the demand zone become the resistance, right? So what we're gonna do now, supply and demand zone. So now we just trade here, stop loss over there, and take profit will be right there. So that's how you just trade the supply, right? Supply and demand zone. Supply and demand zone, because prices will always come back to where it starts from. See how it starts from over here? It went back up to the high, it came back down, it consolidate, and it's coming back down, right? So if you want, because right now this right here at first was the demand zone, it was the demand zone, right? But price break through it, so now it became the resistance or the support, and it's going to hit the support and it's going to come back down to the demand. So I can see all of that, and price can still do its thing. So this will just be the first one on supply and demand. So see how it's already coming down. It can switch, but it'll be live, right? So after that, we will move on to order block. So what is an order block, and how do we identify pretty much the order block, right? So pretty much an order block is located in the middle of your supply and demand trend, right? So how do we identify an order block? The easy way to identify an order block is the small candlestick after a huge engulfing candlestick. For example, one is right here, the candlestick prior to that. Other one here, the candlestick prior to that. Other one there, the candlestick prior to that. So you guys get the idea by now, right? So what all you have to do now, right, is do the same thing. So you know price is going to always come back to that. you get a short, it's going to be the same option with a draw. So now we get a short, and you can just short it again, because price is going to always go back to order block. So that's the dangerous about this. When you mix supply and demand as a trading rate, so when you mix supply and demand with the order block, because the order block is located, you're going to always find the order block located in the supply and demand at the start of the demand zone. You can always find one. So knowing you can trade the supply and demand, you see how I have the same, it's the same trade I just draw for you guys. Or liquidity now, right? So knowing stop loss is gonna be up here now, that's when a liquidity come into play, right? What is liquidity and who's liquidity, right? Liquidity is where the stock, the big money, our retailers is not really pushing our money. The money what we trading with, buying on Robinhood contracts for like $100, $200, even $1,000, it's not really nothing. The banks and all of those, everyone but us, are waiting at the level of a demand zone and a high of a supply zone, right? So you're gonna always find liquidity at the lower right there. After liquidity have been swept, then price is gonna be a sharp V shape. I'm gonna show you guys the full rundown eventually later on in a whole liquidity concept, because the liquidity videos are the cheat code. So hope this video really makes sense to you guys, and I will keep producing more videos for you guys to help you guys on this run of trading, because it really is financial freedom. Doing this is really financial freedom, and it will transform your life really to the utmost beyond greatest life ever. So gratitude for watching, and always be blessed and safe.